Hi, everyone. I'm John Yembo, Senior Manager of Infrastructure Research at Telegeography. Well, as we kick off 2021, I wanted to take a little bit of time and share with you some of the things that we've been tracking at Telegeography over the course of last year. Of course, for all of us, it's been an exceptionally challenging and unprecedented year with a lot of disruption. And the data center market has been no exception. But I think I have some good news for you today, and we'll share some of that with you as we talk about how the data center sector has risen to the challenge and has very much been critical to the continuance of services, interconnectivity, and economic growth in a year when we've been relatively isolated. So I want to talk about a couple of different things that we've been tracking specifically. First, we'll look at the operational environment and how operators have responded to the specific challenges of COVID. And then I want to look at pricing and how pricing has or has not adjusted in light of these disruptions. Lastly, we'll talk about expansion and how operators have continued to bring interconnection to the furthest reaches of the global market, even during times of relatively restricted movement. So let's start by looking at how the industry has weathered the storm of 2020. Back in September, we conducted a survey of operators that was tangential to a much bigger survey that we were conducting on an annual site survey looking at capacity development. We followed up with a survey specific to the pandemic, asking operators how things have changed for them in the pandemic and how they've changed their operations and activities in light of the pandemic. So I wanted to share some of these results with you. So first, if you look on the left, we asked how demand has changed overall. And pleasantly, it seems that for the most part, demand has actually increased over the last year, despite the difficulties in the operating environment. Now, the broad-based yes responses to this were only about 50%, which means that there is still a lot of variance there. But if you consider that the variance by market response, which was almost a quarter of all responses, this is all overwhelmingly positive. There were certainly some decreases in demand as well. We asked specifically by sector how demand has changed over the course of the year in terms of looking at customer verticals for colocation. And overwhelmingly, we found that operators indicated that hyperscale and cloud were driving the growth. Of all the sectors where they were seeing increased demand for colocation, hyperscale and cloud came out very much on top. There were a lot of other sectors that reflected positive growth over 2020 as well, though, including government and along with that, educational services, of course, gaming and streaming and content services, and overall carrier services saw tremendous growth in the data center space as well. On the flip side, perhaps unsurprisingly, enterprise and retail were the biggest areas in which we saw contraction in demand. And that certainly is reflected in broader difficulties that enterprise and the retail spaces faced over the course of 2020. As their demand decreased, so their investment in data center, in some places at least, also decreased. I want to go back to that previous slide again and look at the pie chart on the right. We also asked operators about whether they were experiencing construction delays as a result of COVID-19. And again, even more overwhelmingly, we heard that there were not delays. But again, in talking to individual operators and looking at individual situations, there were very much mixed results. Fully a quarter of responses indicated that there were delays in construction. And this varied by geography and even by time, depending on what phases of protocol different countries were under in dealing with the COVID epidemic. Supply chain disruptions were reported to us as well, depending on where equipment was sourced from and how much capacity was reserved and ready for use. Some operators were able to deploy new equipment in construction fairly easily, while others had to deal with temporarily closed factories or decreased personnel. So skipping ahead to some of the research that we gather on an annual basis, we conduct site surveys annually, looking at where new capacity is developing and where current capacity is deployed. And we saw, as usual, that even during a pandemic year, there was tremendous new capacity being deployed over the course of 2021. And this certainly measured up with what we heard in that COVID survey response. So this is just a sampling of the markets where we saw new construction going up. And this is specifically looking at retail capacity. But by our estimates, over the course of 2020, at least 40 key markets saw new retail colocation data centers going up. Highlighting here in particular Equinix and Interaction, where those operators opened 6 and 4 new sites respectively, and that's in addition to acquisitions that both operators closed over the course of 2020. So switching gears, how did operator pricing respond to the unique dynamics of last year? Well, as it turns out, not a whole lot. The dynamic didn't change much. Operators chose to maintain balance in the face of uncertainty, and pricing trends reflected that. So in our COVID survey, we asked operators if they were changing their colocation rates directly in response to the pandemic. Even more overwhelmingly than the previous responses, the response was no change. And it's likely that due to uncertainty over the long-term effect of the pandemic on demand, and particularly due to the lengthening of sales cycles during the pandemic, operators were loath to make major changes at this time. Well, this response was consistent with our regular reporting as well. In our biannual pricing surveys that we conduct across markets, we found that historical trends were on the same trajectory and that 2020 did not have a major effect on the trends that we were already seeing. In the case of base colocation rates for retail colocation, if we looked at the sampling of markets that we were tracking, I want to particularly hone in on Europe and North America here. We continue to see a return to historical normal price differences between these markets. Typically, we find that European colocation rates are 20 to 30% higher than rates in the US, and that has returned to normal. And over the course of 2020, we didn't see a discernible COVID effect take place in market pricing. Also, when it comes to cross-connect pricing, same thing, and in fact, even more stable. Here, we've consistently seen US rates remaining fairly constant over time. European rates have been creeping upward. That was no different in 2020. The pace of change didn't change dramatically. But as US rates remain steady and European rates rise, we've seen the price multiple between cross-connect prices in those markets get narrower, and now reaching the lowest point that we've seen on record at about 2.0. One other thing I wanted to mention about pricing in particular is that we've consistently seen and continue to see in 2020 that Singapore and Hong Kong are among the most expensive global hubs for colocation. So here, what we're comparing is a basic TCO model, looking at average colocation costs for a 4 kilowatt cabinet retail. And looking at some of these hub markets, if we assume that there's one cross connect with that cabinet, you see the average pricing on the left. If we assume that there's 5 cross connects, you see the average pricing there on the right. So taking that same sampling and the same rank order from the left side, you see the change in rank order on the right. And the big finding, of course, here is that Hong Kong and Singapore remain the most expensive markets amongst this grouping of otherwise pricey markets as well. And I want to come back to highlight something about Singapore and Hong Kong in a few minutes as we talk about development into newer markets. Well, over the course of 2020, in addition to being largely unfazed in continued development and demand for colocation, we saw the interconnection market continue to deploy to new places. This picture, by the way, is of an expedition in Russia from Magadan in the far eastern Siberian region to Petropavlovsk on the Kamchatka Peninsula. So these guys took a 2,000-mile overland journey where it was thought to be impossible, rather than taking a 250-mile sea route that would have been far shorter. But I thought this was kind of a great picture to go along with what we see in the telecom industry, constantly looking to push to new frontiers and find new routes. So in my presentation for PTC last year in Honolulu, I noted that we're seeing a concerted push by global operators of data center, IX, and cloud infrastructure into underdeveloped frontier markets. Well, that trend has very much continued apace in 2020, despite all the challenges. Before delving into specific examples of that, I want to highlight what we're looking for when it comes to developed interconnection markets. Now, there can be a lot of characteristics of a good interconnection market, but here are a few fundamental things that we track at telegeography, namely international capacity. If you see a lot of connected international internet bandwidth, that's tremendous. That represents tremendous demand within that market for connectivity to some other location or multiple locations for access to content and services. We look for data centers. We look for a multiplicity of local and regional data center operators within a market to see a healthy operating ecosystem for networks. We also look for internet exchanges. And there we also want to see a multiplicity of operators with multiple members and high levels of traffic being exchanged. That's always a good sign of a healthy interconnection market. And lastly, cloud providers. Wherever you see on-ramps, wherever you see full-blown cloud regions from major cloud providers, you see a market where there is immediate demand for major cloud services and demand that can only be met by those cloud providers coming and physically locating within those locations. Wherever you see that happening, you see tremendous potential. So what would be some of the challenges of simply relying on existing hubs? If you are deploying networks to a given region, why not just default to the major hub within that region? There's certainly plenty of good reasons to go to those locations. It's where you see the biggest confluence of networks where all your providers, all your partners can coexist in one given location. And there's certainly a lot of resilience and health within those locations, but there can be troubling things as well. You can deal with particularly high colocation costs, for example. At times you can deal with operational uncertainties, and we'll talk about that in a few minutes, particularly in Southeast Asia. There's a basic lack of redundancy. If you're simply going to rely on one market for your network deployment, that kind of goes against one of the fundamental ideas when it comes to network resiliency, which is to deploy with redundancy and diversity. There's also a potential lack of proximity to all your end users. If you're simply in a major hub, that can be a problem. And that's increasingly an issue now as we look at 5G, AI, and a lot of bandwidth intensive applications coming down the pike that require compute and storage at the network edge, as well as tremendous backhaul to nearby hubs. As we see that coming increasingly into deployment, these types of applications, the demand for a more distributed mesh of interconnection infrastructure is only growing. So a few points specifically about Asia right now. If we look at overdependence on a given hub and the need to move out into further frontier markets, Asia is a particularly unique example right now. If we look at Singapore, that has traditionally been the default location for interconnection in Southeast Asia, and it still is and will continue to be a very critical hub. But what we see here is that the government of Singapore has now placed a moratorium on new data center development as they assess the stress that the industry is placing on the market, both in terms of land usage and power usage. So that raises the question of where else do you go if you need to deploy to the region? Well, the nearest alternative hub, Hong Kong, is, as it so happens, has trouble of its own. With the confluence of internal unrest and external pressure, particularly from the US. We've seen Trans-Pacific Cable Project's withdrawal, a request to land in Hong Kong, and the future of cooperation between US and Chinese operators is very much uncertain. So this is one prime example in which we see the demand for a more distributed mesh of interconnection within a given region. So in light of that, we continue to see over the course of 2020, development across the world, both in mature developed markets and in new frontier markets. And to just give you an example of that before we look a little deeper at some specific examples, here's a depiction of where just the 3 largest global cloud providers are deploying new cloud regions. So right now we have, we've seen 7 new cloud regions develop just amongst these 3 operators in 2020 alone. So in a year when there's been relatively restricted movement, they've continued to develop new cloud regions. These 3 operators alone have 26 new regions in the pipeline as of right now, and most of those are in frontier markets. So let's look at a couple of examples of where we see development happening in developing in newer markets. So specifically highlighting here some of what we're seeing in Southeast Asia and the Middle East. So against the backdrop first of the challenges that we're facing in Singapore and Hong Kong, we're absolutely seeing activity elsewhere in Southeast Asia, particularly I would say in Jakarta and to a lesser extent Kuala Lumpur. So DKIX has already moved into the region and has started to run a distributed peering platform between Singapore and Malaysia, and it has plans for further development as well. NTT is ramping up development with a 5th site in Cyberjaya and a new campus opening in Jakarta. But I think Jakarta is particularly noteworthy here as we're now seeing major cloud regions entering that market. And we also see tremendous international internet capacity at 16.5 terabits per second, which is only behind the 3 largest Asian hubs in terms of the amassed international capacity there. And its growth rate is far faster at about 80% compounded annually over the past 4 years. So Jakarta is a particularly dynamic location to watch when it comes to interconnection market development. Of course, it's not without its challenges, but there is a tremendous amount of activity there right now. Moving over to the Middle East, I put Doha on the map here because we're seeing 2 major cloud regions coming into that location. We also see a lot of international internet capacity growth there at 66% compounded annually. So there's a lot of activity in Qatar. That said, we've seen international interconnection operators swarming across the Middle East recently, attempting to figure out where a new connectivity hub could possibly take off. To that end, we've seen data center, IX, and cloud operators moving into places like Cairo, Jeddah, and Muscat. Moving over to Europe, I wanted to especially highlight the amount of activity right now in Madrid and Milan. Now, all 3 of these locations are already dynamic secondary markets. But what we're seeing now is a tremendous surge to provide further cloud coverage across these locations, helping to transform them into sub-regional interconnection hubs in their own right. Google and Azure are moving into all 3 of these locations, Madrid, Milan, and Warsaw. AWS and OVH are moving both into Madrid and Milan, and Equinix is developing its 4th facility in Milan. So there is a lot happening in these particular markets. And if they're not already classified as such, I would say in very short order, they'll be very key interconnection nodes. Just a few other examples from other parts of the world. I think perhaps we're reaching an inflection point in Latin America, where we have traditionally seen dependence solely on Brazil for an interconnection node, and really, quite frankly, Miami. So at this stage, in my presentation last year, I predicted that soon we'd see some news about Santiago, given its high international bandwidth growth and its tremendous local peering traffic. So I'm very happy to report that we are seeing activity in Santiago as of right now. As of 2020, we're seeing multiple cloud regions moving into Santiago, along with new developments in the data center sector by EdgeConneX and Ascenti. In Australia, what I find interesting is that we're seeing a deeper push past Sydney, with international cloud regions now coming into Melbourne, as well as a new build data center being opened by Equinix, adding to its previous footprint in Melbourne, along with the assets it acquired through its Metronode acquisition. So I want to close in a similar way to my presentation in PTC last year, where I highlighted a few frontier markets where we see real promise for interconnection ecosystems to take root, but we still see underdevelopment in some way. So first off, Chennai. I think in some ways, this market is already developed, but it still lacks investment by international data center operators, particularly retail carrier neutral providers. Otherwise, what you have in Chennai is multiple peering ecosystems and cloud footprints and lots of connected international IP capacity. So that's one to watch, I think. To a lesser extent, I wanted to include Hanoi here as well, especially since I expect that we're going to see distributed nodes across Southeast Asia, not just in Kuala Lumpur and Jakarta. Whilst Hanoi is still underdeveloped when it comes to cloud, data center, and IX, what it does have is a tremendous amount of international internet capacity. So that demand that underlying demand is there, and I think it's a matter of time before we start to see development. A few other global locations as well. Now, these are locations that I mentioned. I mentioned all of these in my PTC presentation last year, which you can find online. And I'm going to continue harping on these markets until we see something happening, because I think there's real potential in all of these places. Buenos Aires, in particular, I think has a couple of regional carrier neutral data center operators present, a lot of connected international capacity, but you still see very little cloud footprint and a lack of diversity in the peering market. So I think that's where we need to see more activity in Buenos Aires specifically. Lagos, I mean, in Africa, it's just a matter of time before something takes off on the West Coast. And arguably, it is taking off now in Lagos. What we have is strong international internet bandwidth growth. You have regional data center operators present, and you have a fairly robust peering market that's really taken off in just the last few years and is looking quite good right now. What we still don't have is international cloud providers, and frankly, there's room for growth in the rest of the interconnection market as well. But I absolutely think that we'll see further activity in Nigeria and both the West and the East coasts of Africa as well. And lastly, I would highlight Sofia. And again, this is one that's arguably already an interconnection hub in its own right. It has a richly diverse peering market, a couple of international DC data center providers, and a lot of bandwidth. But you still don't see any major cloud regions there. And it's possible that that will add to the market in the near future. Well, I think one takeaway from this difficult year has been that network and data center services have never been more critical in keeping our world connected. I think it's a real credit to the industry that it has more than risen to the challenge of the times. We've seen resilience in the interconnection sector on display and its commitment to maintain operations in the face of disruption, and the determination to maintain stable pricing in a time of uncertainty, and in the perseverance to interconnect new markets, enforcing the fact that even in relative isolation, we're all in this together. So that's all I have for you right now. Stay well and hope to be in touch with many of you soon.